we're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Hello and welcome to Bloomberg Quint Live. I'm Shraddha Babla, and over the next half an hour, we help you catch up with everything that you missed over the course of the day. Let's start with the headlines. Indian equity benchmarks rebound from Friday's losses led by HDFC Twins, ICICI Bank and State Bank of India. The TPG Capital-led consortium is set to take over control in Fortis Healthcare. India is mulling a proposal for a joint venture between NTPC and two state-run power financiers to bid for stressed power assets under the Insolvency and Bankruptcy Code. US Treasury Secretary Steven Mnuchin says that the US is hopeful of drawing up a new bilateral trade deal with China after successfully renegotiating a 6-year bilateral pact with South Korea. And Uber pulls out of South Asia by selling its operations to rival taxi-hailing service Grab. Well, the Indian markets recouped Friday's losses with gains being led by financials. Both the benchmark indices saw gains of close to 1.5%. And Neeraj Shah is standing by to take us through the details and the market action in all of today.
Well, it was an interesting day of trade and a good start to the truncated week as well. One was hoping, the bulls were hoping for sure, this is how the markets would have started. So about 1.25% or 1.33% for the Nifty 50. The Nifty Bank was the principal reason why the markets did what they did. The broader markets didn't do as much. So the mid caps and the small caps in particular didn't rally as much. And in fact, the market breadth was in the negative at close. But hey, no one's complaining. Let's tell you what moved the index and what didn't. So banks led the charge. Yes Bank, SBI, the broader in the spectrum stocks like Canara Bank and some of the others had an extremely buoyant move today. So it was all about banks and financials. So NBFCs too, the likes of Bajaj Finance, LIC Housing Finance, and then the heavyweights. When HDFC Twins participate 2.5% apiece, you know that you are in a sweet spot. So 3% for HDFC Bank, 2.25% for HDFC. These were heavyweights which made their weight and presence felt in the index today. IT was a bit of a sore spot, but that was about it. What did very well? Again, media stocks jumped. So Hathway, then Z was up about 3.5%. But these stocks, the Network 18, TV 18 duo as well, had an extremely strong session. So the media, by and large, the entire packet did really well. Jubilant Foodworks, 3% up, but nudged fresh life highs in the session today. So record highs for this one in trade. What didn't do well, aside of course, large cap IT, which included stocks like Wipro and Infosys, were some of these names. So Adani Power, marginally off, but closing in at new lows. Ad Labs around new lows. Advanced Enzymes at new lows. So there were a few pockets of weakness. But and of course, the market breadth wasn't the best, but the day belonged to the large caps and the banks. And you have to admit that this 2.5% gain on the Nifty Bank is something that was a standout feature of today's session.
That's right. Let's see how the expiry, however, pans out. Thank you, Neeraj. But the Goldilocks scenario in 2017 is unlikely to stay on this year. That's the word that's coming in from Sajid Chinoy, the chief India economist at JP Morgan. Speaking to Bloomberg Quint earlier today, Chinoy explained why central banks across the world will have to be on the move when it comes to interest rates. Here's a slice of that conversation.
The first time in many years seeing this strong synchronized upturn in global growth, especially in goods. You're seeing 65% of emerging markets last year saw growth upgrades of more than one standard deviation. You're seeing a lot of business equipment spending by the advanced economy. So this is broad-based, it's healthy, and it's balanced. It's regionally balanced and it's sectorally balanced. Now, there are two risks, I think. One that we've known for a long time, that the Goldilocks scenario that we saw in 2017 is unlikely to sustain forever. And so sometime in 2018, the strength of this recovery is going to translate into more slack being eaten into, especially in the labor markets of advanced economies. And so our sense was always that interest rates around the world and central banks around the world will have to be much more proactive on the move in 2018 compared to 2017, and that was always one risk that was going to at some point slow down the strength of this recovery. markets may be heaving a sigh of relief after the Fed, but the fact is, we were just one vote away from the dot plot signaling 4 rate hikes this year, and then there are 3 rate hikes in 2019. So the Fed itself is telegraphing, is signaling that there are 6 to 7 rate hikes on the anvil, and that's going to have some impact on US growth in particular. I think the second risk, which much more immediate, is the risk of a global trade war. I think what we've seen on the tariff side between the US and China may not materially change the macroeconomic outlook globally. But there are 2 worries. One is there are a whole host of non-tariff barriers that the US wants to take China to the WTO, discriminatory access to China, intellectual property rights, in tech, FDI investment, outbound investment from China. If those, our sense is that can have a bigger risk to global trade, to how China retaliates, than the tariffs we've seen. So this is a slippery slope here. And we need to be careful that that doesn't compound the problem of central banks being more aggressive this year.
And it's TPG to the rescue of Fortis Healthcare. A TPG capital-led consortium is all set to take control of India's largest hospital chain, and the deal could be announced within the next few days. PR Sanjay of Bloomberg News joins us with more.
Hey, thank you. So this, you should remember that for years now, Fortis has been targeted by a group of investors, including IHH and TPG-led consortium. And the latest is that TPG consortium with Manipal is planning to acquire the company. Of course, it is it is an invaluable asset for any company. And one would know that TPG has interest in other healthcare companies as well. So they want to group all under one strong portfolio before having a meaningful and profitable exit. But Shraddha, the key point over here is how are they going to ring fence them from the issues, the controversy which is already triggered by the Fortis promoters. So one is not quite sure about that. How are they going to ring fence them? The deal structure is yet to be known. So they don't want to take the legacy, the problem, the historical issues which Fortis had. So TPG, Manipal are going to issue some preferential trade issue as a part of this acquisition, and they would be staying out of all the liability which can arise in the future.
Sanjay, thank you very much for bringing in those details. We will, of course, be watching out for developments on that front, but shares of Fortis Healthcare ended about 3% higher. Moving on, and keeping with Chairman N. Chandrasekharan's stated objective, Tata Sons is simplifying the holding structure of another arm. Tata Power will sell its stake in Pantone and Tata Communications to Tata Sons. Nikki Mirchandani tells us about the rejig and what brokerages make of it in this report.
Tata Power signed a pact with both Pantone and Tata Communications for the company is expected to sell 40% stake in Pantone to its promoter Tata Sons and another 4.7% stake in Tata Communications for a sum of around 6,113 to Pantone. This is in line with company's view on divesting a non-core assets investments, given that the current consolidated debt to equity ratio is currently at a 2.9 times. In terms of the debt on books for the company, for non-project debt, that's the non-core investment, debt to UMPP stands at a significant 10,000 odd crore, while that to fund Welspun stands at 4,450 odd crore, along with others at 1,790 crore. What Morgan Stanley has to say, while maintaining an overweight rating on the counter and suggesting a target price of 94, which indicates a potential upside of a nearly 17.8% for this counter, it says that the transaction value translates to rupees 8 per share for Tata Power, which is way higher than the base case scenario of rupees 6 per share. It awaits clarity in terms of the potential long-term capital gains on this transaction, if any, sees potential upside from such moves which could deleverage the profile further, and has also stated about the company's intent to divest its defense business. However, also says has not factored in any kind of proceeds coming in from the non-core assets in its base case scenario. Goldman Sachs also pretty much reiterates the same view. It says that the sale of stake in Tata Communications is the first among the planned divestments, which could help improve the company's liquidity profile and also help it, let it be in a better position for its next leg of growth.
Well, more on India's IBC cases. The Power Ministry will take up a proposal made by NTPC, PFC and REC to form a joint venture aimed at managing some stressed power assets. Now, Power Minister R.K. Singh said that the plan will have to be discussed with the Finance Ministry before the nodal ministry can give its go-ahead. Bloomberg Quint's Bhanvi Arora gets us the details in this report.
The Power Ministry is looking at a proposal sent by three power PSUs, Power Finance Corporation, NTPC and REC to form a joint venture to bid for stressed power projects that will go through resolution under the Insolvency and Bankruptcy Code. Power Minister R.K. Singh told us today that this proposal will very soon be taken up by the Finance Ministry. Now the objective of this JV is to bid for to take over the stressed power projects and execute them till the demand situation improves, which will then later be sold out at a better fair value. Now, the minister said that the proposal is at a preliminary stage and will be consulted with the Finance Ministry and creditors, which will consider RBI and its legal framework. Now, the new RBI norms on resolution of stressed assets will push almost 70,000 megawatt power projects under the Insolvency and Bankruptcy Code and will hit the sector hard.
Meanwhile, the fight for Essar Steel rages on. ArcelorMittal, one of the interested companies, says that it will challenge the lender's decision to disqualify its bid. Vishwanath Nair, who's been tracking the story, joins us with more. Vishwanath, what is their reason for this challenge?
Essentially, Shraddha, what their statement says is that a resolution professional in the matter has sent a letter to ArcelorMittal on the 23rd of March, wherein wherein the resolution professional said that the company was disqualified or considered ineligible to bid for Essar Steel's assets because it was still a promoter for Uttam Galva. It was a technical issue, as the company points out. However, ArcelorMittal has said that the stock exchanges have already declassified the company as a promoter for Uttam Galva, in which case the ineligibility criteria that the resolution professional is citing is probably will not hold water. They've gone to the NCLT, they've challenged this decision and said that they are eligible in their current form in the way the resolution plan has been created, and that they can bid for Essar Steel. This ArcelorMittal says is a way to sort of protect its rights under the insolvency and bankruptcy process. Also, it is considering the case that has been filed by New Metal against the resolution professional and the lenders in Essar Steel. New Metal, it did something similar last week, wherein it filed a petition at the NCLT in Ahmedabad, wherein it claims that its eligibility is intact in the current form that it exists at this point in time, in the form that the company exists at this point in time, and that the NCLT should pronounce New Metal as an eligible bidder for Essar Steel. That hearing is going to come up tomorrow. We will know what ArcelorMittal's hearing and what the NCLT has to say about it in the coming days. In the Essar Steel case, of course, the lenders have called for rebids, and those rebids are expected to be put in by the 2nd of April, wherein New Metal as well as ArcelorMittal both will be allowed to put in their fresh bids for Essar Steel.
All right, thanks Vishy. Thank you for bringing us those latest updates with respect to Essar Steel case. ArcelorMittal clearly not ready to give up as yet. But after both ArcelorMittal and New Metal were disqualified as suitable bidders, the resolution professional has invited new bids for Essar Steel. Fresh bids will be accepted from 6 potential bidders till the 2nd of April, like Vishy said. Chairman of JSW Group, Sajjan Jindal, said that the committee of creditors did not allow them to re-enter the bidding for Essar Steel, adding that they would have received more money had they been allowed to do so. Listen in.
In this case, we wanted to re-enter, and we wanted to give a very good competition to, and the creditors would get more money if we were involved. But unfortunately, because they felt that if we were given an opportunity, then they will have to advertise it in the newspapers, and they have to call for the bids again, and people may ask for data room to be open. So we gave it in writing to the COC that we don't need any time, and we are willing to participate as is basis. And whatever information we have, we are willing to. But they did not, in their, let's say, their own discretion and in their thought process, they thought that they don't want to give a new entrant a chance. So they did not allow us, which is okay for us. I mean, if they don't want more money, then it's up to them. It's a public money after all. We were willing to participate and give a good fight.
The company law appellate tribunal has rejected Binani's contempt petition against the resolution professional. The appellate tribunal in its order said that the contempt plea is not maintainable. Arpan Chaturvedi gets us all the details in this report.
Well, Binani Industries had initiated this contempt plea against the resolution professional in charge of Binani Cements, and in their application Binani Industries had said that there were actions on behalf of the RP which make for a case of contempt. For example, they said that they were not given proper notice to attend the meeting which happened on 14th March. Binani Industries said that they were given only 1 day notice, whereas they should have been given at least minimum of a 7-day notice. Apart from that, they said that they were also not supplied with the relevant documents that they wanted to attend the meeting. So these were some of the grounds on which Binani Industries had initiated this contempt plea, but the NCLAT headed by Justice S.J. Mukhopadhyay said that a case of contempt is not made out and the plea is not maintainable. However, they allowed them the liberty to approach the NCLT Kolkata, where the insolvency proceedings against Binani Cements is going on, and the bench said that Binani Industries is free to raise their issues at that appropriate forum.
Meanwhile, the Supreme Court has defended Liberty House's plea to be considered in the Bhushan Power insolvency process. Liberty House UK, which expressed interest in the assets of Bhushan Power and Steel, is challenging the rejection of its bid for Bhushan Power. And India's JSW Steel said it would spend $500 million to build its US operations in Texas. The company has signed an agreement with the Texas Governor's Office, which brings a grant worth $3.4 million to the company's unit. Speaking to Bloomberg Quint's Purva Chitnis, Parth Jindal, the director of JSW USA, said that the company plans to triple the sales after the investment.
We've made we've signed a memorandum of cooperation with the government of Texas, and we've announced a $500 million investment into the facility in Baytown. About $150 million of that would be going towards modernizing the plate and pipe making facility to make it state of the art. And the balance $350 million is going towards putting up an electric arc furnace and a slab caster, so that we could actually manufacture the steel in Texas rather than importing it from other countries all over the world. So it's a very exciting thing. With this, our cost structure would come down. We would be able to save close to $200 per ton on costs, because we would be saving up on all the freight costs. We would be adding a lot of efficiencies, and plus Texas is endowed with huge quantities of both scrap metal as well as natural gas, which makes it a very lucrative way of making steel. From this, we are hoping that over the next 24 months, we would be, after the project is commissioned, we could take our capacity utilization numbers from 30% that they are today all the way up to 90%, both tripling our sales as well as our revenue.
And on to some interesting developments in the media space. Mukesh Ambani has big plans for his media empire. Just over a month after announcing the Eros International deal, Reliance Industries now plans to buy more than 40% stake in Savan, the music streaming app. Samit Sarkar tells us the deal contours in this report.
Reliance Industries will be putting in close to 806 crore rupees for 41.1% stake in Savan Media Private Limited. And how will they get this stake? Well, they'll buy partial stake from the existing promoters for 676 crore rupees, and they'll be also putting in 130 crore rupees, which will be invested by the company for growth and expansion of the entity. Now, the second part of the deal is where Reliance Industries will merge its own music app, that is Jio Music, with Savan India, and the combined entity will be valued at close to $1 billion, that is around 6,500 crore rupees. And in that combined entity, Reliance Industries will own 81.7% stake. Now, this valuation of $1 billion is given by Reliance Industries based on the valuation at which they have purchased stake in Savan Media Private Limited. And in this $1 billion US dollars. Geo Music is valued at close to $670 million, while Savan at $330 million US dollars. Now, Reliance Industries is expecting to complete this deal before June 30, 2018. And along with that, the company has also committed to invest another 520 crore rupees, that is close to $80 million US dollars in future date. Now, why this investment? Well, after creating data abundance environment in the telecom industry at cheaper rates, the company is now providing platform to its customers to use this data. Along with that, this investment will strengthen Reliance Industries' digital content and entertainment offering. Now, the company invested in Balaji Televisions, which has content, which has show content. Then it invested in Eros, which has movie content, and now the company has invested in Savan, which has music content. It has more than 36 million songs in 15 languages and 900 plus label partnerships, which can be accessed across the globe. Now, this is Reliance Industries and their affiliates' fourth investment in the media industry. In 2014, they acquired Network 18. Last year, they invested in Balaji Telefilms. Earlier this year, they invested in Eros International, and now they have bought in stake in Savan at 806 crore rupees.
A lot of words between the Congress and the BJP on data sharing spiraled today, with Rahul Gandhi dubbing Prime Minister Narendra Modi the big boss who likes to spy on Indians. Meanwhile, BJP accused Congress of data theft, saying that it had taken off its app after the allegations came out in the open. The Congress, however, claimed that the site was dysfunctional. Congress President Rahul Gandhi said that the Prime Minister was misusing his position, and the Namo app secretly recorded audio, video and contacts. It even tracks your location via GPS, and he's the big boss who likes to spy on Indians. Now he wants data on our children. 13 lakh NCC cadets are being forced to download the app. And BSP chief Mayawati today accused the BJP of trying to create a rift between the newfound alliance between SP and BSP. Mayawati said that the friendship between the two parties was in national interest and urged the non-BJP parties to come together to fight the NDA in the 2019 general elections.
सपा व बसपा की आई नजदीकी को लेकर जो किस्म किस्म की बयानबाजी कर रहे हैं, तो उन्हें मैं ये बताना चाहती हूँ कि हमारी ये नज़दीकी अपने स्वार्थ के लिए नहीं बनी है। बीजेपी के लोग सपा व बसपा के लोगों को कितना भी भड़काने की कोशिश क्यों ना कर लें, तो भी ये लोग देश व जनहित में इनके बहकावे में कतई भी आने वाले नहीं हैं, क्योंकि हमें व अन्य और सभी विपक्षी पार्टियों को मिलकर देश में आम जनहित में इनको इस बार केंद्र की सत्ता में आने से जरूर रोकना होगा।
Meanwhile, in international news, the US has started renegotiating its trade pacts with individual countries. The Trump administration has inked a deal with South Korea this weekend, something that the Treasury Secretary Steve Mnuchin described as a win-win for both countries. The next pact, he said, was going to be with China. Bloomberg's news and Mark Niquet has the details in this report.
Stephen Mnuchin was very clear on the political talk shows that the U.S. will proceed with the tariffs unless there's an acceptable agreement that the president can sign off on, is how he put it. But he did say he's having productive conversations with the Chinese vice premier, and they're trying to come to some kind of agreement that potentially could forestall the tariffs that the president announced he wanted to impose on China. Treasury Secretary Mnuchin also said that essentially an agreement has been reached both on revising the 6-year-old bilateral trade deal, which is known as KORUS, as well as the tariffs on steel imports that Trump wanted to impose. This had also been confirmed by the South Korean trade minister. We don't have a lot of the details yet about what this agreement might mean for both the trade deal and for the tariffs, but Steve Mnuchin did say that South Korea will reduce the amount of steel that they send to the U.S. as part of the agreement.
Standard Chartered pegs the impact of the current U.S. import tariffs on China at less than 2/10 of China's GDP. The bank's chief Europe economist, Sarah Hewen, however, is worried about the situation if the tensions were to escalate. Now, in a conversation with Bloomberg earlier today, she said that broader trade restrictions could shave off more than 1% of China's GDP and see rippling effects globally. Listen in.
the impact on the Chinese economy is between 1 and 0.2% of GDP. So it doesn't sound as if it's huge, but nevertheless, it's shaving off GDP to a certain extent. Now, if things escalate and if we see the US banning all high-tech goods imports from China, the impact, of course, is much greater. It's between 1% and 2% of Chinese GDP. If we're talking about all direct and indirect imports from China into the US being banned, then 3 to 4% of GDP. So there are potential, particularly the risks of escalation, I think, have to be taken quite seriously in terms of the impact that there could be on the Chinese economy and others as well.
It's interesting, isn't it? Because you wonder whether you need to pay more heed to the risks of escalation or the risks of de-escalation or the potential for de-escalation. Daniel Moss, writing on the Bloomberg this morning, telling everybody calm down and take a cool shower was his lead into this, saying that with days of delay, because we don't know the details exactly of what the Treasury wants to put a tariff on in China, and subject to lobbying, for both sides, there's plenty of room for manoeuvre and to still claim victory. So I suppose if you want to look on the hopeful side of things, you can say that both sides might use these 15 days to try and change the argument. But would that make you feel any better about the potential for negativity?
Absolutely. And of course, you know, in laying out the sort of real downside risks, we're not saying that that's going to happen. I think our view is that there is time for negotiation, sort of 15-30 day time horizon between the tariffs actually being imposed, so they may not be until May at the earliest. And of course, in that time, there are going to be intense negotiations to try to bring the two sides together, to try to avert any escalation. And of course, what's happening to the markets, I think, is a sort of warning signal about how confidence can be affected more broadly. So there's incentive for both sides to get to the table.
64 people have been confirmed dead and 6 missing in a fire that broke out in a shopping center in Russia on Sunday. The numbers were confirmed by Russia's emergency situations minister today. The fire broke out in Winter Cherry Mall in the Siberian city of Kemerovo. However, there are no reports yet confirming if the victims died from burns or smoke inhalation. According to the investigative committee, 4 people have been detained for questioning. The investigators have launched a criminal probe into possible negligence and violation of fire safety. And nearly 2 years after Uber sold its business in China, the world's largest cab aggregator is ready to shut shop in 6 other Asian countries. Uber has entered into an agreement with its Asian peer Grab to sell its business in Southeast China. Kayungi Park of Bloomberg News gets us the details in this report.
Well, it's going to involve almost all countries within Southeast Asia where Uber has a presence in, including Singapore, Indonesia, Philippines, Malaysia. So it will be across all board in Southeast Asia. This basically deal will make Grab basically take the dominant role in the hail market here in Southeast Asia. Obviously, they will become bigger because both Uber and Grab have been in this very intense fight over who will be number one and who can grab more market share. And in doing so, they've been, pumping up a lot of cash in the process. So this will basically give Grab an upper hand. But at the same time, this will also open up a lot of competition from the local companies that are offering similar services here in Southeast Asia. So it's good for Grab, but then again, there's still competition coming in that field.
With that, it's a wrap on this show, but there's lots more coming through the day. Thanks for watching and stay tuned to Bloomberg Good.